The Trump presidency was marked by unprecedented economic policies and sweeping tax cuts that impacted millions of Americans. But what does it mean for your financial future? Whether you agree with his policies or not, understanding them can give you powerful tools to navigate economic changes and grow your wealth. Today, we're diving into how Trump's policies shaped the wealth landscape, how they impacted different income levels, and what lessons you can take to build financial security in today's world and beyond. Let's break down the building blocks of wealth creation under Trump's presidency. The Trump tax cuts.
I will make the Trump tax cuts permanent. They expire in a year. And we will cut your taxes even more than that.
One of the hallmarks of Trump's presidency was the 2017 Tax Cuts and Jobs Act. This legislation slashed corporate tax rates from 35% to 21%, aiming to fuel economic growth by allowing businesses to keep more of their profits. This wasn't just a win for big corporations. It also had significant effects on individual taxpayers. The standard deduction for individuals nearly doubled. For single filers, it went from $6,350 to $12,000. And for married couples filing jointly, from $12,700 to $24,000. In practical terms, this allowed many Americans to lower their taxable income. If you were a middle-income earner, this meant more money in your pocket come tax season, which could be put toward investments, paying off debt, or simply building an emergency fund. The lower tax rates also meant that higher earners kept more of their income, which they could use for long-term investments, including stocks or real estate. While tax cuts were contentious, one thing is clear: they left many Americans with opportunities to build wealth if they played their cards right. Economic growth and job creation. Trump's administration placed a significant emphasis on revitalizing American industry and jobs. To encourage companies to invest domestically, his policies included tax incentives for companies that created jobs in the U.S., as well as tariffs on foreign goods intended to encourage buying American-made products. The outcome? The U.S. saw notable job growth during the first 3 years of Trump's term, with unemployment hitting record lows for many demographics. One way this impacted everyday Americans was by increasing job security and wages in certain industries. With more job openings, workers often had the leverage to negotiate better pay and benefits, which contributed to increased disposable income for many households. If you were working in a field that benefited directly from these changes, you may have seen a boost in your paycheck. However, it wasn't all smooth sailing. Trade policies, such as tariffs, also raised prices on some goods, which led to higher living costs. For families trying to build wealth, these price increases could sometimes negate gains from job growth. But with smart budgeting and investment, many individuals could capitalize on this period of economic growth to build wealth. Stock market impact. The Trump years saw substantial growth in the stock market, with indexes like the S&P 500 and Dow Jones experiencing significant gains. Trump's pro-business stance, coupled with corporate tax cuts, fueled investor confidence. For many, this was an opportunity to grow their wealth as stocks reached record highs. Investors, from individuals with retirement funds to wealthy hedge funds, reaped the benefits of a bullish market. If you had a 401k or other retirement investments, there's a good chance you noticed substantial growth during these years. By 2020, the stock market was up significantly from where it started in 2016. But what about those who didn't have much experience in investing? For beginners, this period taught a crucial lesson. Entering the market can be intimidating, but it's a key method for long-term wealth building. Building an investment portfolio, even with small amounts, can be transformative if you stick with it and understand market fundamentals. Of course, the stock market also had its dips, especially during global uncertainties like the COVID-19 pandemic. But the resilience of the market throughout this period gave hope to investors and reinforced the benefits of a diversified portfolio. As with any investing period, staying informed and making educated choices were key. Small business growth. Trump's policies weren't only tailored toward big corporations. Small businesses also saw benefits through deregulation and tax incentives. Deregulation in certain industries made it easier for entrepreneurs to navigate the initial stages of starting a business. For those with small businesses, this meant less time and money spent on administrative tasks and more freedom to focus on growth. Lower corporate taxes also allowed small businesses to reinvest in their operations, which could mean hiring more employees, expanding products, or investing in better technology. This period gave small business owners, especially those in industries that benefited from deregulation, a chance to grow and become more competitive. Plus, with increased consumer confidence, demand was on the rise, creating an encouraging environment for small businesses. For aspiring entrepreneurs, understanding the favorable conditions for small businesses during Trump's presidency can be valuable. Whether you're interested in e-commerce, service-based businesses, or local retail, observing how previous policies aided small businesses can offer insights into navigating similar growth opportunities in the future, even as economic conditions evolve. The real estate advantage. Real estate has always been a powerful vehicle for wealth creation, and Trump's policies helped make it even more attractive. The tax reform allowed for increased income and property deductions, and it particularly benefited real estate investors who could take advantage of the mortgage interest deduction. With lower tax rates and higher standard deductions, many Americans felt more incentivized to invest in real estate. In cities where property values surged, homeowners saw their net worth rise as their property appreciated. And for real estate investors, this period offered opportunities to expand portfolios in both residential and commercial properties. As a result, many people could diversify their wealth beyond traditional stocks, adding a layer of financial stability. However, real estate investment can be complex. To get started, understanding the market and calculating risks is essential. During this time, many Americans learned that real estate investments require a long-term mindset. If you're considering real estate, look into markets that show potential for growth and focus on properties that align with your financial goals. Remember, real estate investments can be lucrative, but they require patience and smart management. What it means for the future. So, what does all this mean for your financial future? Trump's policies highlighted some valuable strategies for building wealth, from taking advantage of tax benefits to investing strategically in the stock market and real estate. Moving forward, building wealth requires staying educated on tax changes, diversifying your portfolio, and adapting to economic shifts. As policies and economic conditions change, knowing how to leverage tax incentives, finding opportunities in real estate, and staying updated on the stock market can make a significant difference. Building wealth is a marathon, not a sprint, and staying informed on political and economic shifts is essential. Regardless of political opinion, it's wise to learn from the past to shape a better financial future. As you look ahead, remember, building wealth means finding opportunities and staying proactive about your financial journey. Adapting and planning will help you stay on track. So that's all for today's video. Thanks for tuning in. Don't forget to like, subscribe, and share your thoughts in the comments below. How do you plan to build wealth in the years to come?